What is going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. Today was one crazy roller coaster, but I want to break it down on what the current data points are saying, what caused a lot of volatility, and everything else you need to know from today. Before we get into any of that, make sure to hit that thumbs up, and with that, let's get right to it. So SoFi did open up. It was kind of scary. I saw it hit like $6.36 as a low, and that was a byproduct of GDP as well as initial jobless claims, both coming in a little bit better than anticipated. So the market went negative and are instantly going to correlate that with interest rate cuts. And so obviously the data points coming out weren't necessarily what the market was expecting. So as a byproduct, it did sell off. This was a very quick bought up dip, as you can kind of see. Throughout the day though, massive amounts of buying coming from institutions. So these are all the transactions that did occur today on the secondary market above $100,000. So you do see quite a few big ones, 3.26 million, 7.56. First thing as well, 1.02 million. So big money was definitely getting into SoFi, despite there being no news, no SEC filings, nothing along those lines. PCE is coming out tomorrow. So once again, that's going to be another very big indicator linked to rate cuts. And I'm going to play this near the tail end of the video because it talks on how we should be at least moving away and stop focusing so much on monetary policy rather than the true fundamentals. And I feel like that is going to be very important to SoFi because I think a lot of us realize that SoFi hits home run earnings time and time again, just because of external factors and some little dash of manipulation as well. SoFi just gets dragged down. But once there's going to be that transition away from just focusing so much on monetary policy, I think that this is where SoFi will definitely move up. So I wanted to play this near the tail end of the video. As of right now though, because of GDP, this did go down from 60 down to 57.9. So this is the likelihood of a 25 basis point cut, and that's for the September 18th, 2024 meeting. But again, this whole situation right here will change as of tomorrow once PCE does come out. So stay tuned for that. Moving on, looking at some of the data points, starting off with options, 2 million in calls, 647 in puts. 53% of all the options being done today were optimistic and bullish. And based on the call options, I think it's fair to assume that the 650 was going to be purchased, very much so, because that's part of SoFi's funneled cycle. Looking at the open interest though, you do see currently 36,000 at that 650, 26,000 at the 7, and then 45,000 at the 750. So tomorrow with PCE, and the debate as well tonight, you're going to have a hell of a lot of volatility tomorrow. And if SoFi is kind of around this range, no doubtably you're going to have shorts being very active, trying their very best to suppress SoFi below 650. But hopefully SoFi is able to continue this very, very beautiful momentum, and hopefully we'll just say fuck you to 650 and move back towards a 7. But we'll just have to wait and see. Pardon my French on a side note. Typically don't like to swear on videos, but today 766,000 shares were increased by shorts. 18.46% of the free float is being shorted. Works out to be 191.66 million shares overall are being shorted. Utilization is 72.02, and then cost to borrow average is 0.89%. So I did bring this up briefly in my pre-market video, but I just wanted to kind of break it down for you. So it did jump up for the short interest to the 18.46 range, only because NASDAQ yesterday did just submit their report. So as of June the 14th, there was 186.07 million shares being shorted. So that's the true amount. What Ortex does is they take that information, calculate up to today's date, and that is how you do get this 18.46%. So that's how it did have that jump up in between. It's always delayed information based on those reports, so it's kind of unfortunate, but that's kind of how the market is. So aside from all of that, you do see a lot of buying as well. So to make things even more interesting, you will see, especially with tomorrow being the very last day in Q2, you're going to see a lot of institutions and ETFs rebalancing their portfolios. You're going to see the market reacting to the debate as well as PCE, and then you're also going to have shorts trying to suppress Possibly, if so, SoFi around that 650. So tomorrow's going to be a very interesting day. With it closing at 654, it is trading between this S2 and this S1. So $6.45 is that strong support. On the flip side, $6.69 is that next strong resistance. Looking on the actual chart, lower percentile of the Bollinger Band. Stochastic, you do see it's still oversold. So if there's some good stuff that comes out tomorrow, you should see a rush of value investors getting in. And despite everything, number of retail investors were getting out today. So I'm not really sure why. People, I think it was just more so institutions buying the dip, not necessarily true investors or retail investors. It's always backwards. Retail is always kind of just sometimes, not to be offensive or anything, but somewhat sheep. So if there's fear, they just kind of sell off and they don't really buy in. And this is how things always happen. This is why I like to follow what big money is always doing and when they're buying, because they typically buy. And then what you always, funny enough, see is almost like a week, 2 weeks after that, then you start seeing these bullish articles. You see these bullish ratings coming out saying, oh, SoFi is a buy because they've already bought, they've already covered. Now they want the stock price to go up. They want retail to cause more of a further up push in the stock price because they've already bought, right? They want to benefit even more. It's very stupid and a lot of manipulation. And before I get into this video, there was one thing that was posted by Arnie. I actually did have a hell of a laugh because of this. So yeah, investors, Hood, and it's very true. A lot of people just focus so much on Robinhood. PayPal, I think some people see it as a good value play, but at the same time, it is just sometimes it's just sucking as well. Then you just see SoFi. SoFi is just the dead man underneath. This was quite funny. But anyways, beside the point, I'm going to play this. Let me know your thoughts on this. So only a minute or so. And just puts it in perspective on how SoFi could really benefit in the foreseeable future.
Get to our market panel, 𝗪𝗧𝗡𝗖𝗪 of RBC Capital Markets and Jake Jolly of BNY Mellon Investment Management. Guys, welcome. Lori, so looking at this software move today, names like Adobe, Salesforce, even on the smaller end, Asana, quite a bit higher. It makes me wonder, how vulnerable is this broader market to a moment of AI disillusionment, since AI is so much the story? With, I think you say, the median forward price to earnings ratio of the 10 biggest stocks is near 30.
It is. It recently got as high as, I think, 29.8 times, and it hasn't really been able to break above that 30 times level if you look at recent highs, kind of post-pandemic. So we've got a trade that's generally full in terms of valuations. If you look at the Mag 7 names as kind of a proxy for either the AI trade, or kind of the high-flying mega-cap growth stocks, that one's also seen, tremendous earnings growth if you look back. But if you look forward, you're seeing pretty healthy growth rates, but they're decelerating and losing their advantage relative to the rest of the market. And if there's one thing that I've learned in my 2 decades on Wall Street, when you've got expensive valuations and you've got decelerating growth rates from astronomical levels, it's really, there's just not a lot of margin for error. And I think that's what we're starting to see with some of these reactions.
Well, that being said, still, Jake, you say even if there's no decisively good news coming out soon, the overall market can keep creeping higher if we're just muddling through. Why?
Yeah, I think that's right. I mean, when we look at the macro backdrop, and that's really what my team focuses on, this is still a backdrop that I think is generally supportive for risky assets and equities because, we're going to see moderating growth, but it's going to be positive. We think it's very unlikely to be recessionary. We think that those cuts from the Fed are on the horizon, even if they get pushed off a little bit. And I think maybe most importantly, when we look at the earnings backdrop, the earnings picture, I think, is broadly pretty positive. We are, I think, seeing some of that weakness at the top of the market and some jitteriness coming from that. But when you look at the, other 493, I think there's a lot of positive momentum there. You're seeing, I think, that broadening out in the earnings picture. And I think the sooner we can get to a place where we're not playing sort of the monetary policy guessing game and we can really focus on fundamentals, I think the market will come to appreciate the fact that we still have positive growth. We're going to get some easing on the horizon. And generally, I think that's going to be pretty positive for this market. Now, that might take a few quarters to play out, but I think the setup here is still relatively positive into 2020.
And that's 100% on point because I do my pre-market video every day and it's hard to predict exactly how the market's going to really react to certain data because even seeing GDP positive. And also initial jobless claims this morning, positive. And to see this sell-off, that is quite annoying. It kind of goes to show that people are just focusing too much on rate cuts and what the Fed's are going to be doing and whatever else. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And with all that, appreciate all of you watching.